Hello, my name is Jake Bernarde, and I'm pitching JBS S.A, ticker JBSAY. Currently, the company trades at $14.45 with a price target of $18.60, representing an upside of 28.7%. JBS is a global processor of protein sources including beef, pork, lamb, and poultry. They also engage in prepared food production and distribution, cold storage, livestock feed production, and the production of byproducts such as leather, personal care items, and cleaning products, biodiesels, and collagen. The company operates through the following segments of Beef USA, Pilgrim's Pride, Brazil, Pork USA, and Sierra. Beef USA engages in the processing of beef and prepared foods in the United States, Australia, and Canada. Pilgrim's Pride, or Chicken USA, processes poultry and pork and other prepared foods in the United States, Europe, and Mexico. JBS Brazil produces beef and leather products in Brazil and also conducts other business-related operations. Also, Pork USA processes pork in the United States, while Sierra processes poultry and pork in Brazil. JBS derives 47% of its revenues from the United States consumer market, followed by Brazil, Mexico, Australia, Canada, China, and over 180 other countries around the world. Founded in 1953, JBS is headquartered in Sao Paulo, Brazil. JBS has experienced favorable market conditions over the past 16 months, with a buoyant U.S. cattle industry and strong price inflation of protein sources. With this environment, the company has produced historically high revenues and a 2021 growth of 22% year over year. Strong protein and byproduct prices and demand will allow the company to offset rising cattle prices, especially in its Beef USA segment. While the protein sector has been susceptible to commodity fluctuation and low margins historically, JBS has stabilized their gross margin over the years through meaningful acquisitions to diversify their product base across international markets. Compared to global peers including Big Four meat packer Tyson Foods, ticker TSN, JBS is trading at a discount with a 4.2 times forward 2022 EV to EBITDA multiple compared to TSN, who trades at a multiple of 7.17. Also, while operating in a somewhat controversial industry, JBS is implementing stronger ESG initiatives, including a commitment of net zero emissions by 2040. Also, JBS has invested in companies that will reduce its environmental impact through waste management and innovation projects. JBS and the food industry as a whole have been very resilient since the peak of the pandemic. In executing the company's long-term strategy of geographic and product diversification, JBS has invested in plant-based products through the acquisition of Vivera, Europe's third largest plant-based protein producer. Also, the company has many diverse product lines through its core business segment and its majority-owned brand, Pilgrim's Pride. Since 2009, Pilgrim's Pride has operated under JBS, driving revenues in its poultry segment as one of the largest producers in North America. To add to this product mix, JBS has been actively acquiring smaller firms in the industry. In 2021, the company completed 8 acquisitions, up from 2 and 6 acquisitions in 2020 and 2019 respectively. This added an estimated $1.4 billion for JBS. By expanding geographically and offering a wide variety of products and services, JBS will be in a competitive position to weather unfavorable market conditions, hence reducing their overall market risk. This could add as much as $1.20 per share to JBS's valuation. JBS has utilized new technologies to strengthen its supply chain and support ESG initiatives while operating in an industry that isn't known for innovation. JBS has a zero-tolerance policy for illegal deforestation among its cattle suppliers. Their system accesses satellite imagery to monitor JBS's suppliers, and as of April 2021, the platform utilizes blockchain technology, which has enhanced data security and reliability. The company aims to spread this technology throughout its supply chain to ensure environmental and social compliance, which will enable a unified approach to addressing these global issues. This innovation improves JBS's ESG standing, which could make the company more suitable for investment from funds in the future, hence increasing demand for its shares. Furthermore, this technology will lead to cost savings over the next 3 years as it is implemented across its firm and its subsidiaries. Over the next 3 years, this technology is estimated to contribute 10 bips in marginal growth. This ESG initiative and others set in motion by the company over the past 5 years are beginning to come to fruition, ensuring a more sustainable future for the company overall. The global consumption of protein is relatively stable year over year, although larger trends exist over 5 to 10-year periods. Already one of the largest consumers of poultry in the world, representing about 50% of total U.S. protein consumption, the U.S. per capita consumption of poultry has increased 6% since 2016. Over the same period, Pilgrim's Pride's revenue has grown at a CAGR of 13.3%, contributing an estimated 7 to 9% or $3.9 billion in growth to JBS's top line. JBS has positioned itself to capitalize on per capita growth in regions around the world. Furthermore, Huon Aquaculture, which was acquired by the firm in 2021 and operates 13 marine aquaculture sites in farming salmon and trout, will be a new platform for growth, similar to this of its acquisition of Pilgrim's Pride in 2009. In order to reach an intrinsic value for JBSAY, a 5-year DCF model was constructed. Using a terminal growth rate of 1.5% and a WACC of 9.05%, an intrinsic value of $17.37 was reached. A sensitivity analysis of plus or minus 50 bips on the terminal growth rate and WACC resulted in a target range of $16.21 to $20.02. Secondly, an enterprise value to EBITDA multiple valuation was calculated using a 6.68 multiple weighted average, resulting in a price target of $22.60. Additionally, a price to earnings multiple valuation was calculated using a weighted average of 10 times, generating a price target of $24.64. By weighing the models 80, 10, 10, a price target of $18.60 was reached, resulting in an upside of 28.7%. Three key risks include protein prices and demand, Brazil's state-controlled developmental bank divestiture, and new coronavirus variants. Beef, pork, and poultry prices are somewhat volatile in inflationary environments, and the decline of protein prices or demand or higher animal costs could adversely affect overall profitability. Next, Brazil's state-controlled developmental bank sold 50 million shares in February of 2022, worth about $360 million. This is part of the bank's plan to divest 12% of its total stake of 24%. This could cause stock overhang. Lastly, the emergence of a new COVID variant could disrupt supply chains globally and/or create volatility in the commodity market. Gilberto Tomazoni has served as CEO of JBS Foods International since December of 2018 and has been with the company for 7 years. In the past, he served as CFO of several companies in the industry, including CEO at Sierra, a subsidiary of JBS, and CEO and director of JBS Foods S.A. Accompanying Tomazoni is Guilherme Cavalcanti, who has served as CFO since December of 2008 as well. Previously, he was CFO of a Brazilian pulp maker, Fibria, and has served other management roles at companies in Brazil and abroad. Thank you, and I look forward to Q&A on Friday, February 25th.